Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Ethereum. We're also going to talk about Bitcoin a little bit in the spirit of the halving. So for those of you who don't know, there was a pretty historic moment today in the fact that the block rewards of Bitcoin, so the amount of Bitcoin that the miners get, dropped from 12.5 Bitcoin per block down to 6.25. So this is a very significant moment in history in cryptocurrency, and usually is at least the catalyst for a new bull market. Of course, on this channel we do subscribe to lengthening cycle theory, so the actual move that would likely come to say a new all-time high for Bitcoin is going to be pushed down the road a little bit more. I doubt it's going to be up in the imminent future. So let's go ahead and jump in. So I covered this yesterday for Bitcoin, so if you want to see the same charts for Bitcoin, go watch that video, or I'll show a comparison at the end of this video. And if you are unfamiliar, I do have a Telegram chat room, and we have around 3,200 people in there, so go check that out. And if you want access to the premium list, then check out intothecryptoverse.com. So here what we're showing is the average price of Ethereum each calendar year. So it's interesting because we're not looking at all the different volatility or anything. We're just saying, okay, during that calendar year, what was the price of Ethereum? During 2015, the average price was $1. Note that 10 to the 0 means 1. 10 to the 1 means 10. The difference between each major tick mark is 10x. So let that sink in. If you look at, say, 2015, it was $1. 2016, it was $10. So the average price went up an order of magnitude. 2017, the average price was over $200. So it went up by more than an order of magnitude. Then in 2018, the average price was around $400. So you can see this was starting to level off, only going up another 2x from 2017 to 2018. So this was our expansion phase. And then we had a contraction. So we went from our average price of 400 back down to 200, and then we've been holding steady at around 200, which is where we were in 2017 before the blow-off top that we saw in 2018. So I think these charts are useful because it shows us, our expansion phase moving up, our speculative bubble phase, and then a retracement, our retraction essentially, and then basically stabilizing a new bottom before ultimately moving back out. If we show the standard deviation, we're going to show one standard deviation. You can see that actually, during these earlier years, the price didn't fluctuate nearly as much. But as we continue to move on in time, you can see during 2017 and 2018, when we were, in full swing of that speculative bubble, we had very large standard deviations. And these have retraced a lot. The average volatility has significantly reduced in 2019 and 2020. So you can think of this as our kind of our baseline in 2015, an expansion where we see huge levels of price volatility, followed by a retraction back into our new normal of prices of Ethereum. Here we're going to show what the minimum value is. So the minimum value of Ethereum is essentially, it's almost monotonically increasing. It might actually be monotonically increasing, which means that it only goes up. Historically speaking, it doesn't actually pull back ever. If you look in 2015, we can just go through it. It looks like it's around 40 cents. 2016, around $1. 2017, around 80 cents or 90 cents or so. 2018, we're looking at around $80, maybe $75 in 2019, around $100 in 2020, around $100. Now, some of you would note that these numbers aren't entirely accurate. And the reason you might, because we know we saw less than $100 Ethereum. The reason that this is showing, this isn't really showing that aspect is because we're looking at daily data. I'm not counting in every little price wick down. It's just looking at the daily close, where was the price of Ethereum, and that's what we're using as our baseline. So, in terms of investing in Ethereum at the lowest point of each year, it does tend to keep moving up, which is interesting. Now, if you look at the maximum, kind of tells a similar story. The maximum price in 2015 being around $3, then in 2016, $20, 2017, around $70, $80, somewhere in there. 2018, or sorry, 700 to 800, not 70 to 80, 700 to 800. In 2018, this is where we went up to around 1400, and then we retraced with a maximum value in 2019 of a few $100s, and then again in 2020 of around close to $300. Ethereum made a run at $300 earlier this year. So these are interesting, an interesting way to look at the charts to try to help people better appreciate the macro level picture, to help you not focus on the day-to-day movements, but to just focus on, say, accumulating a position. We know there's a risk involved in cryptocurrency. This is not financial advice. We know there's a risk. We accept that risk. If it goes to zero, it goes to zero. But the alternative, you have to ask yourself, do you want to risk not holding Ethereum? A lot of people say, well, it's too risky for me to be in an asset like Bitcoin or Ethereum. And one of the things I respond to a question like that is, well, there's also a risk associated with not holding it. Because if you're not holding it and these assets take off, then you're really missing out on something that you maybe could have allowed a certain risk tolerance for that asset. Now again, this could be out of some people's risk tolerance, what they're okay with doing, and that's fine. If they choose to make that decision and they say, you know what, I recognize that Ethereum might see a really good ROI in the next market cycle, but I just have other things I need to focus on, that's completely fine. It's more so if you have some extra cash and you are speculating on the market, you think that Ethereum is going to be one of the big winners of this next market cycle, then you take that risk and you accept what comes with that risk. And if it works out, and if we see a bull run and Ethereum goes up 100x or something, then you will be rewarded. And at that time, people might say, how did you know? You're so lucky. Well, you're not lucky. You took a calculated risk and it paid off. That's what it is. It's not luck in a sense. It's you're calculating what the risk is associated with doing it, and maybe it works out, maybe it doesn't. It doesn't necessarily make you lucky. It just you made a good investment decision, or you made a bad one. And Ethereum does seem to be the backbone of a lot of cryptocurrency in terms of everything being developed. Let's go ahead and look at Bitcoin. I want to remind you of this one. I did cover this in a video yesterday, but just so you kind of get a better appreciation for the expansion and contraction phases. Bitcoin has been through 3 market cycles, whereas Ethereum has only been through 1. So you can see these moves up, and then a retracement, and then a move up, and then a longer retracement, and then a move up, and then an even a longer retracement. And this is helping us establish the idea that the next move up will be longer, and then the next retracement will be longer. So the next move up taking us to, say, 2023, and then a retracement going into, say, 2026, 2027 timeframe, with the 2024 halving helping to curb the effects of the bear market rather than catalyze a new bull market, and the 2028 halving, and I don't know exactly what year. Maybe it occurs in 2028. Maybe it occurs in a different year. I haven't actually looked, to be completely honest. But whatever year it occurs in, I think that will help catalyze, say, the next bull run in a sense, after this one. So 2020 halving will help catalyze the bull run that'll occur during the later on in the halving, closer to the next halving than it is to this one, most likely. The 2024 halving will likely curb the effects of the bear market. The 2028 halving will help catalyze the new bull market. This is the way I see it. Obviously, I could be wrong, but this is just my own pure speculation. If we then take this graph, this Bitcoin graph, and then inset it in the Ethereum figure, you can kind of see basically a similar trend here. It looks kind of similar to this middle phase here of Bitcoin, so the second market cycle, and we've compared these before, which is why if you compare the price of Ethereum to that regression band, and then Bitcoin to the regression band, and then take the percent difference between the price and the primary regression band of both assets, they are tending to follow the same pattern, which is why I think that Ethereum will be basically 1,000% overvalued from the primary regression band in 2023, because it's following Bitcoin cycles in a sense, starting from this one, then going to this one, and then if the primary regression band, it will be around $1,000 per Ethereum by 2023, meaning this would be the fair value of Ethereum. And if it's 1,000% overvalued or 900% overvalued, then that'll put the speculative bubble at around $10,000 per Ethereum, plus or minus a few $1,000s. But as we say, what's a few K among friends? So I hope this video has been informative for you guys. I want to remind you that if you want access to the premium content, I do publish a private video for people and looking at some other things, and the most recent video and report, it comes with a weekly newsletter. The most recent one was, okay, well, historically speaking, what day of the week is best to buy Bitcoin or best to buy Ethereum? We covered Bitcoin last week. Ethereum was this week. And statistically speaking, not that it means that it's going to be that way going forward, but statistically speaking, there is a definitive day that if you set out your dollar cost average buys over the course of several years and you just want to forget about it and you just want to pick a certain day, there is one that historically speaking is much better than the rest. And there's also one that historically speaking is much worse than the rest. So if you guys want access to the premium content, I would encourage you to go to the website, and it's just intothecryptoverse.com. I have this weekly newsletter that I publish. A lot of people seem to like it. I put out the private videos. People seem to like that. We have a Google Sheets document, which will give you access to the instantaneous risk levels of Ethereum and Bitcoin. And also we have the S&P 500 for those who are interested in traditional markets. And for those who are interested, we also do have it for Cardano, for ADA. So we have it for those 4 assets. We'll be adding more soon. So look out for that. So those are at least 3 things you get. You get access to a weekly newsletter. You get access to a Google Sheets document with risk levels that you can use to dynamically dollar cost average your position. And you also get access to these videos that I put out every Sunday. And as we march forward through time, so right now I'm primarily focusing on public content, but as we march forward through time, I'll do more and more things for people who are on the premium list, so more videos, more stuff for those people, and then less in terms of, say, like the public facing. I'll always have some public facing stuff, but in terms of, say, my expansion phase, that's really right now. So this is why I'm pushing out so much content. One of the benefits to signing up now, as opposed to potentially signing up next month, will be there is a private Telegram group. And that group is currently sitting at around 200 members, almost 200 members. And I've decided that, for this next market cycle, rather than letting that group get so far overblown that I can't even manage it anymore, and that it becomes kind of not useful for anyone. If you have 1,000 or 2,000 members, it essentially just becomes a public group at that point in terms of the noise that you would have to filter out to find any useful information. So because of that, I've decided to cap it at 250 people. And that way, these 250 people, we can go through the next market cycle together. We'll have, have our plans laid out. I can, focus attention in this group without having to constantly onboard new people into the private group. Of course, we'll always be accepting new people that want to, say, subscribe to the newsletter and subscribe to the videos and whatnot. But if you want access to the private group, then I would recommend that you sign up sooner rather than later, because it will be closing up when we get about 50 or 60 more people. And I would encourage you that the subscription fee, I know many of you are curious, is $49 a month. I do feel like it is worth that, because I publish stuff quite frequently, not only the public facing stuff, and then I answer questions in the private group, but also in terms of the private, the premium content. And that's only going to grow as time goes on. So at least consider joining. If you want a slight discount, you can get that over $49 a month if you pay with cryptocurrency, and you have to pay for either 6 months or 12 months, because it's more of a manual thing rather than something that can be automated month to month. So if you pay for, say, 6 months, you would get around 5% off. And if you pay for 12 months, you get 10% off. Actually, I think it's a little more than 10%. It might be like 11 or 12% off. But you have to pay for the whole year. So if that interests you, if you want to be part of the private channel, the private Telegram group, which will be kind of disappearing soon, just closing it down to new members, then go ahead and check that out sooner rather than later. And maybe I'll even rename that group like something different. Like I was thinking about Into the Microcosm or something where, you know, I can put a lot more attention on this sub community of, say, the larger community, because the larger community Into the Cryptoverse, and maybe I'll just keep it. I mean, currently it's just called Into the Cryptoverse Private, but the public Into the Cryptoverse group we're going on 3,300 members, I think. So that's growing quite rapidly, and we get a new admin there every time we move up another 1,000 members. So if you at least want to join a community and don't actually want to sign up for the premium list, then at least check that out, and you can find that link in the description below. The last thing I wanted to touch base on in this video is actually about Bitcoin. I talked about this in the live stream today, but if you follow my channel, we've talked about this primary logarithmic regression band fit to non-bubble data of Bitcoin. It's interesting because I projected this a week or two ago, saying that, and we've talked about it before, but saying that every time we go into the halving is basically identically the fair value price. So in 2012, the fair value price was $12.13, and the actual price of Bitcoin at the halving was $12.34. So really close. Then in the 2016 halving, the fair value price was $6.31, and the actual price was $6.49. And then in the current halving, you can see we moved up, but then look, we dipped right back down, right at that fair value price going into the halving, and it is currently sitting at around $8,300, $8,400, and then the price at the halving was around $8,500. So in terms of a percent difference, they're basically all on par with each other. And for those who are saying, well, you know, you could have fit this retroactively to make sure this happened, this data here only took data up until this point. It did not include any of this data past somewhere like late 2018, early 2019. It did not take any data past this point, and yet it was still able to predict that you know, the valuation of Bitcoin going into the halving each time was that value. If we continue that trend, then the valuation of Bitcoin going into the next halving will likely be around $40,000, $40,000 to $50,000, probably like $40,000 or so. So I hope you guys enjoyed the content. Remember to check out the premium list if you want that exclusive access and you like the content and you think it's worth investing in terms of how to manage your own, how you manage cryptocurrency in general. Then we'd love to have you in the group. Remember that pay with cryptocurrency if you would prefer to get a discount and not have to worry about the monthly fee that, you know, is going to recur every single month, just so you could pay up front and get a discount. And then finally, if none of that interests you, then at least subscribe to the channel so you can see future videos, because I publish a video almost every single day. And I think this stuff is useful to you guys. From the feedback that I see, it helps you see things in a different perspective than you're seeing on a lot of other channels. Not that those other channels aren't valuable. I think each channel might have its own sort of like, you know, niche thing that it really focuses on. This channel focuses mainly on, say, like data science and these models that we can use to predict macro level moves within the markets. We're not really interested in day trading here. And in fact, I think most people who day trade anyways end up losing money. And then you also have a huge tax liability as well, because you're constantly day trading, so that can be a headache to figure out as well. So we focus on either, you know, long-term accumulation, and then you sell at, you know, in a speculative bubble, or for those who want, we offer, you know, swing trading, momentum shift type analysis as well. So subscribe to the channel, check out the Telegram channel, and join the premium list if that interests you, and I will see you guys next time. Bye.